Are we live?
All
No, all
right.
right.
Good morning,
You're getting,
everybody. Welcome
you're,
back.
you're getting good at this.
Who scheduled this meeting?
What's that?
I scheduled the early meeting. My bad.
Yeah,
I'm
but
in LA. It's 8:30 here, guys.
we're all in the Eastern time zone,
All
so
right.
who
Oh,
I'm gonna
man.
cares?
shoot myself right now.
The
All
smog is
right, go
still
ahead,
rising.
Matt. Go
Yeah.
ahead.
All right. So let's talk market first, and then we'll bring Frances in. Interesting news over the weekend: Trump delaying tariffs on the EU. That was after Friday. Trump putting tariffs on Apple. S&P held at the 200-day. Now it's popping up. My thoughts on this are Trump's watching the bond market. Yield spiked last week above kind of the highs that we saw from Liberation Day. That freaked him out. And, now he's backing off on some stuff. I think the market is now sort of thinking we get, kind of compromise, everybody saves face, don't move the needle a whole heck of a lot type of deals. And, we're moving back up towards the highs here. Anything can happen. Trump could tweet, anything at a moment's notice. So, be careful. But market held where it had to hold on Friday, and things are looking all right. What about you? What do you think, Jeremy?
Yeah, I think the trend is definitely intact. I think we're still pretty bullish. I do have a key zone on SPY looking at it now. Right at the $600 mark is right about where I'd expect a fib to maybe pull back and consolidate a little bit. But so far, man, this has been pretty bullish. And dare I say, I've got a little bit more weight in the long-term stuff than I usually would in this kind of market. Continuing a trend like this, because they usually see it start to run out of gas around here comparatively to previous trends. Did some trimming and some moving around, but I went and re-added some other long positions last week anyway, and just kind of rotated it into some different things. And then there was the nuclear thing. Wow, that's quite the thing. Now we're looking at a little bit of profit taking in that sector, and I wonder what's next. So we're going to probably have to get on to a couple themes here pretty quick.
Yeah, and we can talk a lot more about nuclear. Let's bring Frances in. So long-time viewers know we've had Frances on a lot. She's smarter than all of us combined, so it's always good to get her on.
I agree. I resemble that remark.
What's that?
I resemble that remark.
He's smarter than Pat and Jeremy combined.
Yeah, that's right. Exactly, bro.
So, Frances, why don't you chime in? What are you looking at here?
No, I totally agree with you that Trump is really watching the bond market. Trump got quite a surprise, I think, initially during Liberation Day when the Japanese started selling U.S. treasuries. And we had some more news in the Japan bond market over the weekend. They've ceased their yield curve control. So what does that mean? They've ceased their bond purchasing program, which was designed to depress their interest rates. So they're moving their yields higher. They're trying to create interest in their bond market, trying to create some demand in their bond market with their yields in order to compete with the demand in the US bond market. So there's kind of this big kind of chicken and mouse kind of thing going on. And the thing is that Trump has all the leverage in the trade negotiations because all of the, Japan, China, South Korea, they all have to sell their widgets to somebody. They all represent supply and not demand. So the dynamics are they have to somehow try to, replace the US consumer. That's not so easily done. So we have leverage there. So where do they create leverage? They can create volatility in our bond market by selling US treasuries. 30% of our bond market is owned by foreigners. So I think Matt's exactly correct in the sense is that Trump has got to tweet some market happy news when we have bond market upset. And I think that is a very key point to what he's watching. And I really agree. We're holding our moving averages here on the S&P 500. Will be very interesting to see if we test those highs or not. Are we fundamentally weaker? Do we get a lower high here? And then also, basically looking at the money supply, the M2, if I follow the Fed website, which is the St. Louis Fed, It's saying that our money supply is just higher than ever. And so the S&P is highly correlated with that money supply, but you can see some mechanics shifting in the background with some of the correlations on the US dollar, the fact that bonds and stocks are, have been moving in lockstep, and the fact that gold and the dollar have a very negative correlation, minus 0.95. So those are kind of the things that are the indicators. But as Matt says, and I completely agree, a Trump tweet can, change those dynamics very quickly.
Yeah. So let's pull up the 10-year rate. I think what happened is, what was it? A couple days after kind of the Liberation Day announcement, you saw the 10-year yield spike massively. And that's the first time you saw Trump really pivot. And the thinking is that Bessent, who's, probably the smartest guy in the room over there, pulled him aside and said, dude, we got a problem. And, and I was on News Nation this morning. I kind of talked about this. We don't know what Trump necessarily wants to get out of these trade deals, because it's all art of the deal stuff. Does he really expect massive tariffs to hold? Does he expect massive reshoring? Or is he just trying to, negotiate better deals and get companies to maybe just stop shipping? Or, we just don't know, because this is all art of the deal. We do know he wants and needs lower interest rates for kind of his whole master plan to work. So anytime you see the 10-year spike, that's going to be a problem. And, now twice we've seen that happen, and we've seen a pivot. Interestingly, both times it's happened, you've had, the doom and gloom. Oh my God, the world's going to blow up. And then Trump just tweets something and turns the whole thing around.
All right. So
can I hold on one second, Pat? Can I
Please,
just interject something?
Yep.
I'm just gonna put something out there that I may have said before on one of the previous shows that I don't know, Matt, but one of the things that I find interesting, just when you're sort of finding these, pieces of information in the ethers and trying to kind of put it together, Ray Dalio, as I'm a fan, look, he looks at the mechanics, he crunches the numbers, right? So right there, you're ahead. His doom and gloom scenario has not come true yet, thankfully. But, he talks about the fiscal deficit, and he talks about the debt loads, and he's got a book coming out called How Countries Go Broke and When This, Game of Musical Chairs Stops. I do know that he talked to Tucker Carlson, and I do know that Tucker Carlson talks to Trump. And this was in advance of Liberation Day. And if you reverse engineer the somewhat nebulous math of the original calculations on Liberation Day of the reciprocal tariffs, if you look very carefully at last year's numbers, it takes that revenue alone takes our deficit as a percentage of GDP down to Ray Dalio's 3 to 3.5% target. Now, we're not getting all of that revenue, but I do think that is somewhere in his mind. And then I think Matt is completely correct that, okay, he just went for it on that. And then, the bond market went a little nuts, and Bessent probably did pull him aside and said, hi, this is, these are the liquidity metrics that we're dealing with, which Ray is also thinking with. So I do think that there is something to do with tariff revenue as a compensatory thing for a justification, to keep the tax cuts that are currently in place, but also potentially lower taxes more. I think it's just as simple as that. I don't know how it ends up coming out of the calculator.
You said this before in episode 3, like at the minute 42.
Uh-oh.
Yeah.
Wow.
Yep.
I'm fired.
I'm
like a parrot. Just
No, it was good.
myself.
No. Okay, so doesn't this strike you as like a big web, right? We're trying to all pinpoint this stuff. You have this thing going over here. So I'm going to try to stop it and start with the beginning, right? I'm just going to start in Japan, right? First, early in the time zone, right? So Japan. Why are their rates going higher, Frances? You're saying that they've stopped controlling the rates, therefore they're in effect letting the rates go high so they can attract assets, take it from our bond market. And then is that that's 0.1. Is that correct?
Potentially. Yeah. They also have fiscal problems, by the way. That is a worldwide phenomena after COVID. Is that these, percentages of deficit to GDP in various countries are situational. But yeah, it does increase their leverage from that perspective. And they were the primary sellers of the bonds, if I recall correctly, after Liberation Day, when those yields spiked in our US markets. And so that would give them, and Trump's reaction, as Matt pointed out, was serious. And so basically that would give them an idea that creates leverage for them. So why wouldn't they?
And so these things are connected. Why? Because the Japanese are pissed that we're raising the tariffs and they're going to sell our bonds, and that's going to make Trump lower the tariffs.
No. That's not the Japanese.
Okay,
No.
so what's the story?
They're
Because
more
this is what you.
pacifist
This is
than that.
how this is the logic that it seems like you're following. So what's the answer then, Matt?
Well, it is interesting. Oh, sorry. Go ahead, Matt.
No. You're following this whole Japan thing more than I am. So
You're already on the track.
Not necessarily, but it's just interesting because they've had the yield curve control in place, which is designed to keep rates suppressed, right? And they don't really have quite the inflation problem, and so basically they basically have the liberty of ending their yield curve control and letting the economy tighten a little bit in order to increase their interest rates and their yields on their bonds to try and attract try and attract demand in the bond market. So, and that could come away from U.S. Treasury demand. Remains to be seen, but if I'm these guys in the background, I'm going to try to say, okay, that was very uncomfortable. Liberation Day was very uncomfortable. How do I try in the background to kind of increase my own leverage? And really what we've seen based on Trump's reactions is that changing bond market dynamics does move the needle on some of their leverage. So I might be speculating a little bit, but I think there's something to it.
Got it.
Yeah, I mean, I wouldn't disagree. I think one thing Ray Dalio also said is pay attention to the bond market. And, I think that is more important to pay attention to than the stock market, is to kind of figure out what's going on. The bond vigilantes can kind of, turn everything on its head if they want to. The bond market is massive. It's international flows. And money always goes where it's treated best. So,
okay. So next question, Francis. Right. So why is a 4.5% yield on the bonds bad? I mean, why is that bad? It doesn't seem it's historically low. At least savers get a little bit. You're not flirting with negative interest rates, which I think is even weirder and worse. So why 4.5 seems like the right number, really, right? What's wrong with the 7% mortgage? I don't know. It's there's so much speculation. What's wrong with all that? I don't see that as bad. So explain to me why 4.5% on the bond is bad.
So if we don't have a credit crisis, it's not necessarily bad, meaning if we can continue to service our debt. The problem is if you have a big spike in yields, we have a record amount of debt in the system, and we have a record amount of service on the national debt, which I think hit $1 trillion and became bigger than the defense budget. But here's the thing: bond market dynamics, yields moving higher, as most yields out there, mortgage rates, things like that, follow the 10-year, they follow the 30-year, they follow the treasuries. What's problematic about that from a societal perspective is the fact that that's going to treat creditors and debtors very differently. So that's going to treat, when you think of the wealth gap, that's going to treat the upper 40% who own assets very differently than the lower 60%. So what happens is you increase risk, when we have these massive deficits and we have these massive debts, of creating credit risk if yields move much higher. So where they are right now may be fine. I don't know where the breaking point is.
Right.
Nobody does know where R star is. The Fed would.
But doesn't 2% fuel like speculation and yada yada yada? I mean, isn't that too low? I mean, I don't know.
All right. So let me throw in a couple other things.
Please.
Francis, you were getting to this a little bit.
Yep.
One of Trump's major policy initiatives is to try to restore the middle class, which has just gotten gutted from our economic policy the past couple of decades. And, you look at the middle, so the upper class, typically they've got assets. If they have debt, it's a reasonable ratio. So,
Right.
if you've got tons of money and your mortgage is 7 versus 5, not that big a deal. But
Okay.
when you're middle class, your mortgage, credit card
That's
rate,
fair.
auto loans, student loans, all of those things. The other thing, and we've touched on it before on the podcast with Rebel, is interest rates were very low for a very long period of time,
Right.
much lower than they are now. And you had a lot of banks buying treasuries at those low rates,
Right.
who are now sitting on losses that they don't yet have to mark to market. The higher the rates go up, the more those losses become. So, there is a reason why for Trump getting interest rates down is a major policy initiative. And it is the one thing that's completely out of his control. The Fed, Cash Carey came out today and said, hey, we're not doing anything until this tariff uncertainty goes away. And then you've got the bond vigilantes who are going to do what they do. Trump's got no control. If I want to sell our bonds and buy Japanese or, anything, you can't stop me.
Right.
Yeah.
That's a good answer, though. That's the right answer.
Of course it is.
No, it makes sense.
We're always
I mean,
right.
it does make sense. Okay, so let's make the one more step, take it one step further. So the implications for the dollar is what? And why is the dollar's strength or weakness important? Now, it seems to me, like I did in my own little analysis, that the dollar weakness helps our companies more than hurts our companies, right? So you're going to have to give me a solid pitch on why the dollar should be stronger than it is now, which I think is where you want to go, right?
I actually think, no, not necessarily. I actually think the dollar was overbought and now it's kind of ameliorating itself. I think the correlation against gold is very interesting. The negative correlation with gold is very interesting. The only thing about dollar weakness is it sort of lends itself to this narrative that American exceptionalism is over. If American exceptionalism is over, which I don't think it is, that's going to happen at a snail's pace and then all at once. Really quickly, back to interest rates. I totally agree with Matt. Do you guys remember? So remember that crazy VIX trade? I think it was in February of 18. It was just this bananas broken VIX trade, and people were shorting volatility, and then you had the spike in volatility, and you had a bunch of ETFs.
I was still in college in 2018, so I don't
exactly.
I
So then,
but
think about what happened later, right? Think about what happened after that. Okay, so then you go forward, right? Market recovers, comes up in October. Yellen is raising rates. Yellen is tightening the balance sheet, if I recall correctly, right? And suddenly she raised rates a bit too much. Market starts to sell off. You get your correction. Remember that Christmas Eve? That Christmas Eve was nuts, right? Massive sell-off on Christmas Eve. And Yellen comes out and reverses course, right? Was it Yellen or was it Powell? I'm having a blonde moment. But anyway.
God.
Yellen started tightening. Powell was in there at the time. Anyway, so he comes out.
I'm thinking that was Powell back then.
That was Powell. Yeah, so he comes out, he reverses course immediately, right? The market recovers, was the low on Christmas Eve or Boxing Day, somewhere in there, right? 19, we move into January, stocks recover. Okay, this is such an interesting year because we don't have the COVID effect yet. Even though he stopped raising rates, he continued to tighten the balance sheet. And they were talking about, oh, is he going to lower rates? And I remember going on TV and saying, he's probably not going to hit the gas and the brakes at the same time because it negates his own policy. You're not going to tighten on the balance sheet and loosen with rates. Continues tightening the balance sheet all the way through to September, when they had the bond market liquidity crisis, when you had the spike in the overnight rates in the market because those, probably corporate tax payments or something like that was moving through the system and they were settling those trades. And all of a sudden you had this liquidity in the bond market. He put $500 billion of stimulus on the balance sheet in September of 19 before COVID, right? Not to mention the trillions we added during COVID. So these are the bond market liquidity mechanics that I would argue have not changed, which I would argue that Dalio will eventually be right. But these are the things that Besant is having Trump pay attention to well in advance, because Besant was there for that, as we were. And we remember that. And that was that when the plumbing breaks down, the plumbing breaks down. All bets are off. You're going to have some compensation somewhere in the marketplace, and especially with the Fed, regardless of what they think of Trump. So the risk of that increases if the rates continue higher.
Good
So,
point.
Mike, can you explain to me what you said like a fifth grader? Because I lost
Well, it happens
halfway
very-
through this, dude.
my
'Cause I'm not
point
really sure what
is,
you just said, dude. Is that just me?
It's watching paint dry, right? It happens very, 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 very slowly with rates, and then all at once, because you hit that threshold of liquidity in the system. And it happened during COVID, and obviously Powell came in very strongly and was backstopping credit. Okay. Where did I lose you?
Wait. So you lost me because so
I'm
bonds
sorry.
are,
you
That's
lost him at
terrible.
hello.
yeah, bonds are 4.5%, right? What's
Matt, did you
happening
follow
now?
me?
What's happening now? Just tell me what's
I
happening.
did, but I don't see a point to explain it to Pat. I think
Okay. All right, let's move on. All right. So
now
Dollar-
one
Wait a second. What the problem with rates being as high as they are is that the debt is as high as it's ever been, and that
I
bottom
understand that.
60%, they are living paycheck to paycheck. They're living on credit cards. They're putting their everyday things on credit cards. These interest rates are bananas, and that it's like.
But to be
at
fair, to
some
give you a
point,
chance to
that's gonna
explain yourself, what did Powell do in 19 whenever have to do with what's happening today? That's the simple question.
The simple question and the simple answer is, it looked like markets recovered because the Fed had stopped raising rates, and it looked like markets had recovered after the craziest Christmas Eve ever. And markets looked like they were doing fine all year. There was all this discussion about easing. It just looked like everything was fine until September, and then the overnight rates went to 10%.
Got it. Okay.
And
so
then
you're
all
saying
of a
we're still in
sudden-
a risky area because of
Right,
all these
but
things that could
Powell-
happen. That a la Ray
Yeah.
Dalio. Gotcha.
Yeah,
Makes sense.
Powell, historically, if you watch his behavior, when those things happen, he fixes it in the blink of an eye. I don't think that's going to change.
Right.
He fixed
Okay.
that in the blink of an eye, and he fixed the COVID situation in the blink of an eye. I
Right.
can't remember if it sold off 23% in 28 days or 28% in 23 days, but he fixed it in the blink of an eye, and he comes in very strongly to fix it. So we can expect
the Fed put basically.
Fed put.
What you've got to worry about though now is, do we still have the Fed put because of this tariff uncertainty? Because nobody is sure whether or not what's going on will cause inflation or not. And so will the Fed lower interest rates if they think there's a chance of higher inflation? And they basically said they will not. So
No.
I
But
still
they
think
will if there's a crisis, because a crisis,
right. I
a
still
credit
think you've got the
situation.
Fed put, I think, all of these guys who anytime something happens come out, and there's so many of them on social media, this is going to be as bad as the Depression. The people who called 50 of the last two corrections. Anytime the market goes, bond yields go up, oh my God, everything's going to explode. We're all going to be broke. I don't think so.
Jeremy calls those guys chicken littles, by the way, right, Jeremy?
Yep,
They're
they
not
just
told me
chicken
that.
littles. I think,
Well-
it's marketing. I think
Right.
they understand.
They're marketing chicken little.
The chicken
Right,
littles
but I
are
think
always
they
worried about the
understand
sky
that that's
falling.
not going to happen.
All right, so this is a segue to M2, right? So how can you say we're shrinking the economy when M2 is surging, Bitcoin is screaming, stocks are hitting new highs almost? So what's the correlation there, Frances? It's your topic.
Well, typically, if you look at a chart of the S&P 500 and the M2, they're typically highly correlated. Now, they broke apart this year, which was very interesting. And I think I said on this show, or I said on some shows, they're going to marry each other one way or the other. Either the M2 is going to come down and meet the S&P, or the S&P is going to go up and meet the M2. And what happened? The S&P is moving up to meet the M2 thus far. But to Matt's point, the Fed is not doing anything to help him on the tariff situation. But if there is a liquidity crisis, which any kind of a liquidity or credit situation is de facto deflationary, so then they will not worry about inflation in that moment in time, and they'll probably throw the kitchen sink at it. If Powell's still there, that's what he's done historically. Not that that wouldn't cause latent inflation after the fact, and it certainly did with COVID. But anyway, the money supply is the excess liquidity in the marketplace. And anytime you have excess liquidity in the marketplace, you're going to want to find places to park it. And if you're American and you start parking it in Japanese bonds, no, I'm just kidding. No, I'm just saying that liquidity looks for opportunity. And
Right.
like Matt said, it pays
Right.
where it's treated the best. And so right now, we're returning to this narrative on the large cap. We're talking about NVIDIA earnings coming out tomorrow. And, we're back to kind of old faithful on the TINA trade in US equities. But I think that the bond market is the one to watch from a global macro perspective and what's happening with tariffs, and will be an early indicator of potentially problems in the equity markets.
And going back to the dollar and what you said about US exceptionalism, and we had senior moment, the Navalier on a couple of weeks ago, and he was like, the US is the place to invest. And I mean, I 100% agree. I mean, you look at the top companies, almost all of them are here. I think, you've got a couple in China, but, when you look at anywhere else, I mean, where are their top companies? There are times you want to invest internationally. I mean, obviously, the European aerospace and defense trade is treated us very, 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 very well this year. But the US is still the place to be. Our companies are still the leaders. If you want to do some in China too, I've got those companies as well. I wouldn't argue, but to say, I get research all the time, and all these, sell US, buy Europe. To go beyond aerospace and defense and maybe Novo Nordisk, which I keep getting my butt kicked on. What are you going to buy in Europe? I mean, we're still the place to be, and I don't think that's going to change, anytime soon.
I have a little bit on kind of generalized discussion that I've analyzed anyway, just not really fully. Trump 1.0 was all about, the strong US dollar, and that's kind of prohibitive to opening the market up to other countries. I mean, currently we're seeing a pivot to Southeast Asia for some supply line stuff, and generally some stuff is starting to open up. But as Trump 2.0 more towards the weaker US dollar, so that we can facilitate more of a broad spectrum of trade instead of just depending straight on China and maybe a little on Europe.
Yeah. Okay. Can I go back to this M2 thing, Francis? I'm a little lost, right? So
let's not spend too much time on M2 because it's kind of boring.
Yeah.
But no. But it's not really, in the sense that Francis is saying M2 growth is very strong, right? So M2 growth is fueling the growth in the move in Bitcoin in theory, and fueling the S&P 500. So that's important, right? So how does the government growing M2? And then we'll move on real quick.
Well, M2 is grown by government spending and can be grown by monetary policy if the Fed is doing major bond purchases. I think anytime, the problem is that when the M2 grows, that is all debt. Spending is debt. Some people think that there's this difference between cash and debt. There's a difference between cash and debt in your personal life. I have cash in my bank account. I have debt on my credit card. But as far as government spending goes, only the coins, which are a very small percentage of money in circulation, do not get monetized through the mechanism of debt. So as the M2 goes up, the debt goes up. And back to Matt's point is, if yields spike, the service on that debt or any other debt tends to follow suit. So you can hit a threshold, and the global macro threshold, Ray Dalio is, crunching the numbers, whether he's right or he's wrong, or he's right tomorrow, or he's right in 5 years or whatever. And then you have, obviously the wealth gap and the household consumers. But as long as the M2 money supply is growing, that is typically an inflationary scenario because it's the money supply juxtaposed to the goods and services, which is sort of the ratio which determines inflation and deflation. So,
but we're an investment show, so it's good for Bitcoin and for stocks, right? I mean, that's
right,
basically what it's good
Absolutely.
for. So, I mean, that's why I think it's important, Matt. I mean, I don't know. Okay, so that's all. That's my only point.
No,
right?
It's important unless it hits an unsustainable thing. And Matt made such a phenomenal point about the U.S. Treasuries on these banking balance sheets. And by the way, Matt, those are on the Fed balance sheet as well. And I don't think the Fed has remitted to the Treasury general account in quite some time because it's got these unrealized losses from those treasuries. So it's interesting. That's another thing is the Fed is not filling the Treasury general account. So Trump may, he's trying to compensate for these various shortages, potentially with tariffs. But sorry, Matt.
I haven't crunched these numbers myself, nor do I really care because it's too big to fail. But there's a guy, Porter Stansberry, who I'd love to get on the podcast at some point. He's got an argument that Bank of America is functionally bankrupt because they bought massive amounts of treasuries at 1% that they have not had to market. And that if you did mark them to market, they'd be bankrupt. Again, too big to fail, so I don't care. I'm not going to go out and short Bank of America. But if that's true, that's really, really interesting. Another thing I'll throw out there to remember, because I'll forget, there's another woman I want to get on the podcast, Stephanie, and maybe Kelton, and her idea, modern monetary policy. I'd love to hear more about that. The idea is that if you can print money, deficits don't matter. And she's got some arguments that make some sense. And I'd love to debate. I'd love to debate those on here if we can, because you've got so many people like, oh my God, deficit. And, to their credit or her credit or her movement's credit, I've been hearing about that as long as I've been alive. And, and I'm still here, and I'm better off than I was back in the 80s when I started first hearing about it. So,
and
an interesting argument.
That returns us to American exceptionalism, because what makes that argument, with the premise of that argument, is the fact that we have the U.S. world's reserve currency. And Ray Dalio wrote that book of Navigating Debt Crises or something, where he delineated the 48 different debt crises that have occurred over, whatever, 100 years, where he showed that that's not true for countries who don't hold the reserve currency, because it does matter, because you have to have demand in the bond markets. And so it doesn't matter until it does. And that brings me back to my crazy point, Pat, about 2019 before COVID. It didn't matter until it did. And these things tend to happen slowly and then all at once. But what Matt's saying about Bank of America is also true of the Fed, if it's true. And again, the Fed is too big to fail for sure.
Yeah.
So we're not going to sit here. We're not going to sit here and go, the Fed's going to fail. We're not those kind of get your tin hat. But anyway, no, but it is an interesting argument, because as long as we have the world's reserve currency, which we do until we don't, I think Stephanie Kelton's argument does work. When we lose the world's reserve currency, which that's debatable also, that I think that dynamic changes pretty dramatically.
That's kind of where I led into with a slightly weaker dollar, is that it helps maintain that, we're in that situation where we don't have to worry about BRICS or anything like that so much. Kind of makes sense, because it keeps trade, able to happen more. If the dollar was too strong, it'd be too expensive for anybody to really buy any of our stuff. So what do? The can doesn't kick itself down the road.
You want to pivot to nuclear? You started talking about that.
Me? No. I will, but I actually have nuclear here on my list. I was just Francis, I was going to talk about nuclear, and I wanted to talk about the Sean Ryan thing too, actually a little bit. But nuclear, go. Matt's on nuclear today. He wrote a thing in the Heat newsletter. Look down below. You want to do a little? This is a good time for a segue, Jeremy, of an ad. We have a Heat newsletter. Mac talked about nuclear today. So why don't you hit on that, Matt?
the Heat Formula newsletter, to be
Heat
precise.
Formula newsletter.
Yep, check it out there.
So
And we have a link in the description,
theme,
by the way.
yeah. So the theme, or I mean, one of my favorite themes that I've been on for a little bit, and for lack of a better word, I'd call it Trump's inner circle, is that you want to be invested in companies that people, close to Trump are involved in. You want to be invested in asset classes Trump likes, and you want to take your cues on buying or selling based on whether Trump tells you to do that. So Trump came out, did an executive order on nuclear. We've talked about nuclear a lot on the show. The thinking is it's 5 years away, but it's the future, because we're not going to get where we need on AI with nat gas and solar and wind and all that stuff. You need nuclear, and it's going to be the small modular reactors. So all the nuclear stuff spiked. I've got Oklo up here. It's a speculative name. It's not making any money. Again, nuclear could be 5 years away. This is starting to form. Gil Morales calls this format a punch bowl of death. So,
Right.
that's where, you kind of hit the high, fail, and then come crashing down. I'm still long. I took profits. I'll take some more profits. I'd be careful here, just because a lot of these companies are unprofitable. The name that I'd be in, or that I am in, is BWX, because they do some other stuff, and then CCJ for uranium. I mean, I wouldn't buy that here. That's way extended. I know, Jeremy, you're in LTBR.
Yeah, I closed that today. I was happy
Probably
with that
smart.
return.
That's setting up a punch bowl of death.
Yep.
Too. Looks like a double top.
And from a chartist point of view, I mean, that's what I look for. I look for what's got the biggest range and the biggest potential to hit those targets in the previous range that it established. And LTBR just checked all my boxes. It was a great trade.
Yes, it was. That was.
Would you ever buy like a uranium? Would you ever buy a
What?
uranium ETF or anything like that?
Yeah, I mean, I'm an ETF guy, but I don't like other people's ETFs. So there's
Yeah.
URA.
And
But my guess is URA is probably mostly CCJ. So I'll
Yeah.
just buy CCJ.
Right. I see.
I always say like whenever you start to kind of like an ETF, crack open the top 10 holdings in it and see what the most weight is. And usually you can actually beat them by trading whatever the top 10 holdings are.
Well, and also, I mean, a lot of these ETFs promise you diversification.
Right.
Now, hold on before I comment. That's it.
But when the top 10 is like, 40% or more of
Yeah. So URA is 23% in CCJ. It looks like they have the Canadian listing of it, but so almost a quarter of the ETF is CCJ.
Right.
Got it. Would you ever buy something like UUP? That's like $1. That's like $1.
Yeah,
thing.
it doesn't. Occasionally, I'll buy puts or calls on it.
Yeah.
I mean, it doesn't really move. The problem of trying to trade currencies, if you're not doing the currencies direct or, in futures, are that, they just don't really move. So, unless you get some massive shock, trading UUP isn't going to really move the needle much for you.
I used to run credit spreads on UUP back when it was getting wild. And at one point, I ended up getting assigned on the short side. So fast forward a year, and there was a 4,000 share discrepancy. They said I owned 4,000 shares that I didn't own because the spread balanced itself. But since then, I haven't really messed with UUP. It's just not. It doesn't have enough juice to be worth the squeeze, in my opinion.
Yeah,
All right.
I mean, it's you look at the dollar had a massive move, and this is down like, what's that? Maybe like 8% or something.
Yeah.
I mean, not there's so much other. Jeremy was up 40% on his light bridge in one day.
Right.
So,
Right.
plenty of better fish to be had out there.
So you guys were talking about reshoring, industrial rebirth, reshoring. So what would be the stocks you would buy in that group, Matt? Like, what's a reshoring stock?
I don't know that that's a theme that you're going to really care about, at least not at the moment, because that's I mean, it's fun to talk about, but
okay,
pulling up your whole supply chain in China and moving it to Detroit, I mean, that's not an overnight thing. That costs you as a company a lot of money. There's a reason you were in China.
Right.
What are we bringing here? I think the only thing that perked up my ears in this whole discussion was when, Howard Lutnick was talking about, we're going to bring these factories over here, but we're going to have robots working in the factories. And it's the robotic thing,
Right.
which is, a theme that we're already on. I mean, robots are the future. We're all going to have our own robot at some point. And then at some point it'll become self-aware and it'll kill you. But,
so what would be your stock in that group?
Yeah.
What would be your stock in that group? Well, if you were going to buy a robotic stock, what would that be? Tesla? Or would you be looking at something else?
There are a lot of them. I mean, there is Tesla right now. They are the biggest. There are some private companies that I am hoping against hope come public through SPACs so we can get those IPOs and SPCX.
Right.
I don't think they will, but if they did, that would be awesome. I forget the main private company right now. It's the guy who did Archer Aviation.
Figure AI.
We talked about it last week.
Did we?
We did briefly, and I can't remember the name of it either, but I said, man, that's going to be big.
Yeah, I mean, that's not going to be Anduril, but it's going to be, I mean, there are a lot of really cool private companies right now in a lot of these spaces. So, there's small companies in robotics like AUR and some others. I write about it in the newsletter every once in a while because I think it's a massive theme, but there's so much that, still needs to be played out there to kind of figure out. And really, what I'm on somewhere tomorrow previewing NVIDIA earnings. And Schwab, I think. What I'm going to talk about is, all roads lead to NVIDIA. Because at the end of the day, what's going to be in these robots is NVIDIA.
I was talking to a friend of mine last week, actually, about NVIDIA, and he's kind of comparing it to the history of like Cisco Systems, where it had a massive spike, the hype wave pushed it way up, and then we know what happened. But coming to NVIDIA, I don't think that quite can be the case because NVIDIA's got a lot more fingers and a lot more pies as far as the tech industry goes. I don't think it's going to be so narrowly focused in one thing. And like you said, I mean, we're looking at robotic stuff. We're looking at all the hardware that those are going to need. And I think NVIDIA, in my opinion, is the most agile in being able to onshore production. So what are the thoughts on that?
Yeah, I mean, basically what I said before, all roads lead to NVIDIA.
Right.
What about Broadcom or Taiwan Semi?
AI and, asking, hey, who are the winners in this theme, this theme, this theme, and then rank them.
Right.
NVIDIA is number one in just about everything, and usually they're ranked 9 or 10.
Yep.
Right. Yeah, what about Broadcom or Lockheed or Taiwan Semi?
I mean, those are all ancillary names.
Right. Okay.
And like for me, like you look at the Taiwan Semi, it's got one of those charts that I like to trade, but for me, I don't tend to hold that long term. I'd rather rotate into NVIDIA with the long term stuff for me personally.
Right. Okay. All right. So, Frances, do you have anything to add here? You've been awfully quiet over there.
I've stopped cutting everyone off. No, I'm just kidding. Not really. I mean, NVIDIA.
So like you talk about Trump a lot, Frances. So what do you think what does Trump have to say about like something like we talk about onshoring, we talk about defense, we talk about, nuclear. How about like, is there any other themes you think Trump has his hands in?
No, well, crypto.
Crypto.
I mean, but look at what DJT just announced. And I knew this was coming, and I bought the dip. They just announced they were borrowing. It was either 2.5 or 3 billion to now buy crypto.
Yeah.
And, that was the next logical step here.
Aside from the family meme coins.
Right.
Well, yeah, I mean, I think they're going to buy. They want to compete with MicroStrategy. They're not looking to buy Trump and Melania coin. And there are a lot of companies like this. This is an extremely interesting theme of companies trying to, take that MicroStrategy playbook, which is why I bought the dip on DJT. Yeah, I think, it initially was soaring. Then I think it sold off because they're probably diluting shareholders or something. But, I think when you get dips on these Bitcoin treasury companies, you want to buy those dips.
Is this about the time though, like when your barber's telling you to buy the Bitcoin treasury companies and all that? No, I mean, he's probably doing a Bitcoin treasury himself. He's taking all that hard-earned dough and buying Bitcoin.
It could very well be, which is why you don't lose sight of risk management. And so, the way I play these companies is I buy call options on them. So I've got fixed risk. So I know, hey, if Bitcoin goes to zero, I lose whatever, and that's a comfortable amount.
Right.
There are people who put their entire net worth into Bitcoin and they're multimillionaires, and that's great. Does that make it the right answer? I don't think so. The problem you have with Bitcoin, and you've got people like, oh, Bitcoin will be 1 million, or Bitcoin will be zero. And, that's just throwing darts at a board, because unlike a company's going to trade at multiples to earnings. So we can argue, okay, NVIDIA, I think their earnings are going to be X. I think they can trade at a higher multiple, let's say, at whatever, and its value should be this. And that could be a valid argument. Someone else could be like, I think their earnings are going to be lower. I think the market's going to come down, the multiple will come down, and the level should be this. There's no valuation on Bitcoin. So, you get like a Kathy Wood out there saying Bitcoin's going to 1 million. Why? I mean, you can talk about supply and demand, and maybe that's an argument, but there's no valuation. I think you're just pulling a sensational number out of your butt, and and it's clickbait.
Right.
Yeah. Might I add on all kinds of things Bitcoin? It'll never, in my mind, replace fiat, because mechanically it just can't. It has a fixed supply, and the whole point of fiat is not having a fixed supply. And particularly, when Nixon came off the gold standard, that's what he did, is he, ran away from the fixed supply. So I think that, no, but he's obviously very pro crypto. If you listen to Eric Trump talk, he's anti-bank. And he really thinks that the crypto is going to be our mainstay currency at some point in time. Again, challenging them mechanically to replace fiat, which is the basis of the Fed mandate.
I got a new question. Let's say
hold on. Nor do you want it to replace fiat for a couple of reasons.
Let's say in 3 years or whatever, Trump loses.
Wait. Hold on. So a couple of days ago, it was the anniversary of that guy who bought 2 pizzas, Bitcoin, and that Bitcoin, so he ate the 2 pizzas. The Bitcoin he gave away would have been worth some ridiculous amount of money. So I don't have to worry about that if I pay in dollars. If I pay $20 for a pizza, I don't have to worry about a year later that $20 would have been $1 million. So I'm not going to spend my Bitcoin. I think the other thing you need to be very careful with in a digital currency is, and you don't have it in Bitcoin. I mean, Bitcoin, is not under a central government authority, but if you ever have, and these are the CBDCs, the central bank digital currencies, if you ever have that, and it's a direction Europe is trying to go in, all of a sudden you've got a government that can see everything that you're doing, and a government who, if they decide, can shut you off.
Yep.
And that can be a pretty scary thing.
Yeah. What? Yeah. Geez, it's a whole.
Pat,
Another...
I do agree with Matt in the sense that there is an increasingly wide adoption of the micro strategy.
Yes.
There's an
Everyone's doing it.
emulation going on in
My
private
barber's
markets.
doing it.
I know a private real estate guy who is taking all the rents and putting them into Bitcoin.
I have kind of a comparative issue with it
It
too.
might be a good thing, though. It's hard to tell, right?
Yeah. Hard to
Well,
tell.
again, you need to do the right thing. You need to have proper risk management. And if you're going to take all of your money and throw it into Bitcoin, you've got to understand, I mean, that's a swing for the fences. You could strike out and lose everything, or you could end up a multimillionaire. But there's also going to be a lot of volatility in between. I mean, the first time Bitcoin went over 100, I'm sure you had a bunch of people like, this is it, we're off to 1 million. And then it went down 30%. So imagine putting your entire net worth into Bitcoin and seeing it drop 30% in a couple of weeks. That can't be fun.
Right.
Yep,
so my next question was, let's say Biden 2 comes in 3 years. What happens to all these executive orders and laws about stable coins and all this?
Trump is trying to get this stuff codified. What
does that mean?
I mean, put into law through Congress. Right. It's not going well. So if he doesn't, then the next president comes in, if it's a Democrat, and unwinds, as much as they feel like unwinding, which is probably a lot of it.
Yep.
Right.
Wow. Just like he's unwinding the Biden administration's agenda.
Right. So, Frances, I knew you were going to
go through COVID, but I will say if he is successful with this onshoring, which we are not going to know today, tomorrow, this year, and he can create a lot of growth from lowering regulations, and he can keep everything on the rails with regard to taxes and fiscal deficits and what have you. There are these rumors that Donald Trump Jr. is going to run, or he's probably going to try to create some kind of Kennedy-esque, legacy where he or someone who agrees with his policies stays in office for a while. I think that's what
But I mean, that he's got no control over that from the standpoint that comes down to, where we are at the next election. And, it comes down to that, that powerful question, are you better off than you were 4 years ago? If people are better off, then Vance gets in, or, whoever it's going to be, and this continues. If they're not, then they make a switch and we get Gavin Newsom or something.
Oh, God.
Harry,
I know I'm like the low man on the smart totem pole here, but I think that Trump is like the adult in the room. The market knows that, and I think it goes a ton higher because of that. That's my own belief. But having said that, I'm going to get to one more thing. Frances, I knew you were coming on to talk about tariffs, right? So I did a little tariff research. Do you know what the name? I'm going to ask you guys some trivia, right? What was the name of the famous tariff act of the 1930s?
Smoot-Hawley.
Oh my goodness!
Smoot-Hawley.
Well, you guys got that?
I didn't know that.
I watched Fast Times at Ridgemont High.
Oh, there you go.
You guys, no, but raises one more point. Hold on, then I'll shut up, right? So it talks about another concept called nearshoring, right? And no one really talks about this, I don't think. So nearshoring would be like Mexico, right? So pull up a chart of EWW. That's a Mexico ETF, Matt. Can you pull that up? I think it is. EWW. So you guys ever think about this? I mean, that actually is kind of a new thought, right? I mean, look at this chart, man. I mean, instead of I think what's bad for China is good for Mexico. I think that's this trade. Any thoughts on that?
No, I mean, Trump doesn't want the industry in Mexico either. He wants it here. I've actually tried to short Mexico a couple of times. You can tell by the chart it was not successful. But I wouldn't be buying Mexico here.
Well, doesn't this chart tell you that though? Like Mexico's going to be a beneficiary. I mean, look at that.
It doesn't. It tells you right now that the market likes Mexico.
It's being speculated as
going to happen.
Right. It's being speculated as a winner, and it's a bit overbought.
Got it. Okay.
chased.
Well,
I would say it's overbought. Yeah.
Yeah.
I
well,
would
it's just
say
a new term
basic
that I
sense.
learned in doing my research, and I thought it was, nearshoring, and it makes sense.
It does make sense. I mean, you can go into Mexico and Canada with some of it. I mean, if it makes sense to do so, if you can, as a company, be more agile in doing so, getting around permitting processes in the U.S. can kind of lean that way. But the other part is you would rather have it onshore directly, because the other part of the nearshoring scenario is that sometimes countries will be sneaky and they'll move around that. So like China will ship a bunch of stuff to Mexico to be assembled and then be marketed in the U.S. Same with Canada. So I mean, you'd be better off in better control of it, putting it in your own border.
All right.
Pat, a really quick point on
Final
tariffs
thoughts?
and
Yep.
historical stuff. So basically the 10% across the board, right, is kind of the base case for the new tariffs from Liberation Day. Having 10% across the board is the highest tariff since 1938. And that means that Trump has de facto increased the tariff revenue as a precursor to the big beautiful bill, or whatever the super bill, or whatever the gorgeous bill, or the Barbie bill, or whatever it is.
Right.
Barbie bill.
whatever the heck they're calling it. But anyway, yeah, our tariff revenue is the highest since 1938, even with these 90-day pauses.
Yeah.
So,
And I think
what does
Trump
that mean?
may take well, if again, Trump is going to try to take a victory lap on that. Can't you just imagine the next State of the Union address where he talks about how many gazillions he's brought in tariff revenue after
Plus-
everybody dogged him for tariffs?
Plus, it would
Right.
drop, I mean, income tax would be significantly lower, and that would definitely spur up the middle class to actually gain some footing here. Makes
That's
sense.
the plan. That's the plan.
I mean,
Yeah,
he's got a plan. It's got a lot of moving parts.
Yep.
He doesn't
Yeah.
have control over all those moving parts. It's going to be interesting because he's going to try to do it. Occasionally the bond vigilantes are going to slap him back in the face, but going back to investors, don't get caught up in the day-to-day of this, because there's going to be day-to-day. Have your hedges in place. Risk control is paramount, and then you want to be invested in the top themes. I mean, it's the stuff we talk about over and over and over again. The themes are moving. Forget about, what's the S&P going to do? What's the NASDAQ? Are we in a correction? Are we in a bear market? Are we in a bull
Right.
market? Look at the top themes. The top themes are moving. If you've been positioned in the top themes, then all of this other stuff you don't care about.
Right. Good point.
At the same time, you don't end up holding the bag for all the swing traders and day traders out there.
Right.
Right. Who are probably going to have our nuclear stocks pretty soon.
Yep.
Right.
I got to take some profits soon here.
Yeah.
So any final points, Francis? One-liners, two-liners?
No,
No.
M2 is very indicative of lots of things.
Right. Okay.
Agreed.
Boring though. I agree with Matt.
It is boring, but money supply is something that you want to pay attention to. I mean, it's the simple
But
fact.
what you want to pay attention to is you want to pay attention to Trump.
Yeah.
Like him or hate him, for people in the market, Biden was meaningless, except maybe, the Inflation Reduction Act, which had nothing to do with inflation.
No.
But you didn't have to pay attention to what Biden was saying or doing. Ignore Trump at your peril as a market participant, because he is moving markets and you want to be on the same side as him.
Exactly. You don't want to be holding that bag.
Agree with that. Yeah.
All right. You good?
All right. I think we're good.
Yeah,
Francis,
I'm
good seeing you
tapped
again.
out.
Thank you for coming on.
Again, yeah.
Yes. Always my pleasure. Always my pleasure.
All right.
Thanks
See you
again.
guys.
We'll see you guys.
All right. Thanks.